Welcome to RANsquawk's morning briefing for Monday the 25th of January 2010. Bit of a turnaround in terms of sentiment so far, how we traded here in London. We did open lower in the UK and European bourses, however we have continued to tick off the lowest levels. The FTSE now trading in minor positive territory. Of note on the sector basis, financials are the outperforming sector, so reversing some of the significant losses that we had on both Thursday and Friday session following those comments from Obama over the weekend. That has continued to dominate in terms of weekend news coverage, that Obama news, where they're looking to cut back on risk-taking at the major US banks. We did see Alistair Darling in the Sunday Times this weekend suggest that Obama's proposals for shaking up the banks would not have prevented a crisis and risk undermining the international consensus on reforming the financial system, saying that the Chancellor said that he saw serious shortcomings in the American approach. We are looking out for any comments both today and throughout the week, as US Treasury officials are looking to visit London this week. And also the city minister miners of the UK, he is also due to speak at some point today, however no time set as yet. Elsewhere as well, partly aiding sentiment has been various press coverage saying that Obama has been pushing for backing for Bernanke in terms of his second term after it was delayed somewhat last week. Obama received assurances from Senate leaders that he will be confirmed for a second term, getting support from Durbin, the second-ranking Senate Democrat, Christopher Dodd, the Banking Committee Chairman, and Judd Gregg, the top Republican on the Budget Committee. Elsewhere, in terms of some other things that we've seen, front page of the FT reported that the FDIC is working on plans to package billions of dollars of assets from failed banks into securities. A move will help restart the still dysfunctional markets for mortgage-backed bonds, according to the paper. And we have seen a bit of narrowing in terms of the 10-year German-Greek Bund spread. That was given some of the comments out of the Finance Minister, reiterating that they don't need any help in terms of Greece themselves. They would see to their problems in their own time and as quickly as possible. However, we have seen in terms of a syndicated 5-year issue, they have now opened the books in Greece for that, and those spreads have re-widened back up to around 300 basis points, but still narrow against last week. In terms of other things, we've seen as well comments out of China. They said that they're to maintain a moderately loose policy for 2010. So again, aiding some of those fears in regards to potential further tightening from the PBOC going forward. In terms of today's calendar, it is pretty light on the ground. The early US data we'll be looking for will be at 3 o'clock London, so 9 in Chicago, and we'll get the existing home sales report for December. And half an hour after that, we'll have the Dallas Fed Manufacturing Activity Index as well for January. In terms of earnings, that will take centre stage, but that's all pretty much based around aftermarket. The key one there will be Apple. Again, they were due to report after the close on Wall Street today.